Greetings, ladies and gentlemen. Bitcoin just went to $100,000, and here's why I'm not so stoked. So, what we need to understand about Bitcoin is that the value proposition of Bitcoin has not fundamentally changed. What has changed? Not really anything. When the government prints money, the dollar is debased, and the price of Bitcoin goes up. However, we're also riding another trend as well, which is the adoption rate of Bitcoin, i.e. the more money flows into Bitcoin out of other asset classes, the more Bitcoin goes up. The mother of all evil is in fact speculation. With speculation also comes volatility. It creates disjunctions between what the price of Bitcoin actually ought to be and what it's currently trading for. Speculation also drives short-term trading behaviors, which cause more volatility. And it also increases the risk of massive corrections. This necessitates a lot of caution and strategy. So there's a couple of different factors that are coming into play here. For one, we have very strong adoption, and there's even further strength in adoption because we just crossed this massive number of 100K. More people are coming in. But why are they coming in is important. Like, the main reason that most people are coming into the space now is because Bitcoin has had massive short-term success. So those new people that are coming in right now are coming in for that short-term success. This speculative reason for entering the market over on number 2 here is one of the reasons that Bitcoin is actually going to experience some weakness in the near future. Now, there are massive opportunities for growth in this market, i.e. because new people are coming in, some of the new people that are coming in will come and stay for the long term, but some of the new people coming in are just looking for the quick gains. In the next 6 to 12 months, we are going to have a massive threat of huge corrections, 20, 30, 40% in a week or a month. That's normal for Bitcoin. So as some of these new speculative traders come into the space, what we're also going to be seeing is a much higher use of leverage. Leverage in cryptocurrency trading significantly increases the risk of forced liquidations during market downturns, as traders may be compelled to sell assets to meet margin calls. What is a margin call? Essentially, people are trading with money that is not theirs. So they take $10,000, they put it on massive leverage so that they're actually trading with $100,000 that's not theirs. And then it takes only a small correction in Bitcoin, maybe 5–10%, for them to be completely stopped out of their place, and they're forced to sell their entire $100,000 position in order to meet the margin call. That causes the massive drops. So we have to look at the two different things that are at play here, which is the short-term traders and the long-term traders. So ways that you can mitigate your risk if you are a short-term trader. I suggest that you just don't even do the short-term trading thing. However, if you are a short-term trader, there's several things that you need to understand. Deleverage as much as possible. Just play the spot price. Bitcoin has a documented propensity to move massive amounts in a very short period of time, and the probability that you will get stopped out of your trades is very, very, very high. If you are trading the spot prices, make sure that you're utilizing your stop loss orders as things go up. If you don't understand what a stop loss is, you should not be day trading. Diversify your portfolios. If you are in this space of the short term, make sure that you're diversified. I personally just bought a basket of 10 different coins that I thought were going to do really well, and I'm capturing those rides. All of the coins that I thought were going to do fantastically actually didn't, and the ones that I thought were going to be my lowest earning coins went up massively. So you really don't know what's going on. So for long-term investors, I also have a long-term bag. This is actually the majority of my trading is long-term investing. What you should do, you should adopt a philosophy centered around patience and strategic growth. The longer that you buy it for, the better things are going to be. You should be utilizing the dollar cost averaging method. If you are not in crypto at all right now and you want to get in, this is what I recommend. Just start dollar cost averaging into Bitcoin over a long period of time. You might not be happy that you started right now in a year or 2 years, but in 4 to 5 years, you're going to be very, very happy that you continue to dollar cost average throughout the downturn, which is coming. So here's what's going to happen in the next few months. So a really important thing that we have to talk about if you are invested in the cryptocurrency space right now is the impacts of market sentiment and volatility. So there's a massive psychological trigger that takes place at $100,000. Bitcoin has never been $100,000. 4 years ago, everybody was saying it was going to 100K, and it didn't get there. Now we've just crossed the $100,000 mark, and there's a massive psychological mark in people's minds that it just can't go up higher than that. It's mostly because they don't understand Bitcoin, mostly because they don't understand money. However, it's going to lead to a couple of different things. It's going to lead to some people who are going to get very bearish and they think that it's going down because it can't possibly go up any higher than this. It's already up to 100,000. There's also going to be a ton of people in the space who are FOMOing, that it's finally been proven to them that Bitcoin is a good thing, and it's 100,000, and now they think it's going to 1,000,000, and so they're going to jump in because they have a fear of missing out. All of these different psychological triggers massively distort your intelligent thinking. I have recently heard multiple people say things like, this time it's different, this time it's going to up and it's never going to go down. These people fundamentally don't understand how money works. Every time an asset has a parabolic move to the upside, it has a commensurate retracement. That is just how money works. And if you don't believe me, here is the history of all of these different runs. We had in 1720 the South Sea bubble, where investors faced massive ruin because of inflated promises that led to catastrophic market collapses. The Mississippi law firm bubble, there was a law firm in Mississippi in 1720 that had over-optimism resulting in a massive, severe decline in the stock values, and it caused a massive amount of economic turmoil. That was in 1720. In 1840, we had the railway mania, and people were massively speculating in railway stocks. Now, anybody who held railway stocks for the long term in 1840 made a ton of money, but any people that were speculating on the massive growth in the short term got wrecked. In 1929, there was a massive crash in the stock market because of basically the same thing that it always is massive amounts of credit being used to speculate on the market. That ended up triggering the Great Depression. In the 1990s and the early 2000s, we had the dot-com bubble crash. This was mainly because there were tons of internet businesses that actually didn't have any value. That's very much what's happening in cryptocurrency right now. Many of these cryptocurrency tokens don't actually have any value. Bitcoin does, Ethereum does, Solana does, but who knows who's going to win that race? We just don't know. And if that wasn't enough, we had the 2008 housing market crash, which was again driven by massive amounts of credit and speculation in the housing market. We also just recently, like 4 years ago, had a Bitcoin boom, and 4 years before that we had a Bitcoin boom, and every single time it's done the same thing. So I don't understand why anybody would say that this time is going to be different. However, it seems to be the case that that's what everybody feels like every time this comes around again. So investors are massively vulnerable to bubbles, mainly because overhype inflates asset prices and fear of missing out makes people jump in when they're already too late. I'm not saying that it's too late for Bitcoin if you're a long-term investor, but the probability of Bitcoin going up, I couldn't tell you. Maybe it goes up another 20%, maybe it goes up 50%, maybe it goes up 80% from here. I just couldn't tell you. What I can tell you is it's going to be massively volatile, and there's going to be a lot of people that get wrecked. So the fear of missing out is a psychological trap where people start investing without regard to the fundamentals and actual market conditions. And so when you make your investments, make sure that you're making your investment decisions based on actual fundamentals and market conditions, not because you're afraid you're going to miss the boat. These past market bubbles that we've actually already talked about illustrate the cyclical nature of overhype and FOMO. I'm trying to emphasize here the importance of disciplined investment strategies to avoid repeating costly mistakes from history. What do? Number one, we got to understand market sentiment and utilize market sentiment averages. One of my favorites is to look at the rainbow chart. The rainbow chart tracks basically where the actual price of Bitcoin ought to be. That's a good one. You can also watch the Fear and Greed Index if you're more on a short-term basis. The Fear and Greed Index basically tells you how much people are paying for their leveraged longs, which is an important thing to know. Now, this thing says balance optimism with fundamentals. I prefer to balance pessimism with fundamentals because it keeps you safe. Only the paranoid survive in this market. So if you are going to be day trading, make sure that you are massively diversified across multiple assets, set clear profit and loss limits, and employ stop loss orders. That's going to be super, super important. Stay up to date on trends, but avoid the news. Guys, the news will cause you to get FOMO. The news will cause you to get overhype. If you watch the trends and you watch the charts, not people talking about the trends or people talking about the charts, watch the actual charts. Pull up the rainbow chart, pull up your Fear and Greed Index. Pay attention to those things. Those are important. Don't pay attention to the fake information. If you have any questions about where I get these things, ask me about it. Okay, so next thing we're going to do is we're going to address some common misconceptions and risks in the crypto markets over the next 6 months to a year. So misleading price perceptions. This is a massive one, guys. A lot of people are going to think that high Bitcoin prices equate to stability, which is actually not the case. That's reversed. The higher the price of Bitcoin goes, the more volatile it's going to be. Misreading this is going to lead to complacency and poor decision making. Market correction risk. The market correction risk is going to go higher and higher. Here's the situation. Everybody who has ever bought Bitcoin in the history of Bitcoin is currently in massive profits. So like I can take profits pretty much at any time and make quite a bit of money. Anybody that's getting into this space over $100,000 is going to be in a lot tighter of a space. However, the higher it goes, the more people are going to be in profit and the more they're going to be in profit. So the likelihood of them taking profits is very high. The likelihood of individuals coming into the space and getting the likelihood of people coming into the space, trading on leverage and getting liquidated is going to be much higher. This is not great. This creates even sharper market corrections. Now, the other thing to think about is exchange vulnerabilities. Coinbase, Kraken, Crypto.com. These can all go down due to a DDoS just because so many people put in requests to get on the network that it actually crashes the network and then you're not able to trade. So that's another reason that day trading over the next 6 months to a year is not going to be a good strategy. You won't be able to get your orders filled. Also watch out for cyber attacks. As the price of Bitcoin goes up, the probability of a cyber attack taking place is massively. Wrecking people is going to be much higher. Okay, so here's a couple of dangers of misinformation in the crypto space, okay? One is the impact on investors. Misinformation leads people to make impulsive decisions based on narratives that don't actually make any damn sense. I just saw somebody saying that Bitcoin was going to go to $250,000. Based on everything that I know, probability of that is very low. So number two is that false information is going to massively increase volatility. And they do that on purpose. So there's people out there that are making a ton of money on the volatility, on the swings. So what you'll see is you'll see a massive ad campaign saying Bitcoin is going to the moon. Everybody jumps in and then they dump on you. Then they're going to come out with a massive ad campaign saying Bitcoin is going to zero so that you will sell to them. And then they'll come back out and say that it's going to the moon and everybody will drive back in. And they're creating that volatility on purpose. So don't fall for the fear, uncertainty, and doubt, and also don't fall for the FOMO hype. So this is also actually really bad for long-term market integrity because what's going to happen is a lot of people are going to come into this space thinking that they're going to make a ton of money and then they're going to get dumped on like they always do, and then it leads to people saying things like, well, Bitcoin is a scam and it's always been a scam, yada yada, but they haven't been in the space long enough. You really need to be in the space for 4 to 5 years for you to really see the profitability. So a couple of practical steps for responsible investing in the cryptocurrency space. Do your own research, guys. Collect comprehensive research. Don't just go onto YouTube, find some individual that you want to follow, and then do everything that they're doing. That's not going to work out for you. You got to do your own research. You got to understand your trades before you get into them. You should definitely understand Bitcoin as a technology. I will probably be releasing a video later, so if you want to go ahead and sub to me, you can see what Bitcoin actually does as a technology and what blockchain technology does for the world. That'll be really cool. Guys, analyze the market trends. It's super important for you to understand the market trends. While technical analysis, in my opinion, is bullshit, we do need to understand what has happened in the past, why those things have taken place, and pay attention to macro factors that are driving this trend. And then also review regulatory developments and make sure that you guys aren't breaking the law. Make sure that whatever exchanges or coins you're getting into are not breaking the law or doing anything like Enron or like FTX did, where they just take all of your money and they give to politicians and you know, buy stuff with it like maniacs, and there's no actual value in their coins. So implement a diversification strategy is the next step. That's super, super, super important. Spread your investments across multiple assets and multiple platforms. See, like what I talked about before is that there's a lot of risk exposure when you're all on Coinbase or all on Kraken or all on Crypto.com or all on Ledger. All of these different places have a certain level of risk. Not only should you spread yourself across multiple different cryptos, you should also be spread across multiple different exchanges. In the event that Coinbase goes down, you can still get most of your money out through other avenues. So establish clear investment goals before the run takes place. We're already partially into the run, so what are your goals for the next 6 months? That's what you should be thinking about. And utilize SMART criteria. These are specific, measurable, achievable, relevant goals that are bound by time. What an investment actually is when you have a reasonable expectation of a return over a given period of time. That's an investment. So whenever you buy these things, you should have all of those factors accounted for before you get into any coins. Thank you guys very much. If you need more information, if you enjoyed this information, if you enjoyed this format of me using a little slide deck, Let me know in the comments. Also shoot me an email at fwgtinc@gmail.com if you are interested in any personal finance information. Things that I can help you out with include setting up your net worth statement, setting up your budget, seeing where you're spending money on financial services that you didn't realize you were spending money on. I estimate that the average individual is spending between 30 and 40% of their total income on financial services that they didn't even realize they had. I can help you identify those things in your own setup. And if you'd like to talk to me about those things, shoot me that email, fwgtinc@gmail.com. You can also check me out on Instagram at fwgtinc. Thank you guys very much and have a good day.